for the page to load there. Hello and welcome to another episode of the Federal Church Presents Better Than Bloomberg. Continuing our coverage of the global financial system collapse 2023, the worst ever. There we are. We're heading into the third phase of crisis. Ex-Fed president warns as small bank deposits and loans surprisingly jump. Again, that's just recycled crap from the bigger banks and money printing, making everybody poor. Following yesterday's ugly money market fund accelerating inflows and Fed balance sheet, and where all that money actually went, all those deposits actually went, another jump to a record usage of the Fed's Bank Term Funding Program, emergency bailout cash. Expectations are that bank deposits continue to leave U.S. commercial banks. If everything's so awesome, why are banks using the Fed's emergency facilities so much? And regional bank shares bounced but stalled at resistance. So according to the latest H8 report from the Fed, on a seasonally adjusted basis, total U.S. commercial bank deposits, including large time deposits, rose by $30 billion during the week 5/17, ending a 3-week streak of net outflows. One wonders where all that fresh cash that flooded into money markets came from. And again, their little shenanigans recycling, printing money, and, well, Yellen begs Congress for trillions of dollars to try to backstop 3/4 of the U.S. GDPs in deposits in banks that are insolvent. So, large and small foreign banks all saw inflows, 10 billion, 6 billion. Large banks, 10 billion, small banks, 6 billion. Foreign banks, 13.4 billion. Again, it's like what I was saying in the other video. At some point, the foreign banks too will fail. Right now, you can move your cash over there. But in the end, they too will be systemic. On an unadjusted basis, deposits increased 32.9 billion. Large domestic banks, 21.4 billion. Small domestic banks, 3.8 billion. Foreign banks, 7.7 billion. Side by side, this is the first week in the last 6 where seasonally adjusted and non-seasonally deposit changes are even close to the same, because we've been saying that these have been nothing but shenanigans for the last couple weeks as the banks become more insolvent by the day. On the other side of the ledger, commercial bank lending rose 10.4 billion in the week ended May 17th to a 3-week high, according to a seasonally adjusted data from the Federal Reserve on Friday. Somehow, again, back to the point to be made just a few seconds ago, they fudged the data. Small banks, seasonally adjusted, were the main lenders last week somehow. Well, fudge. And again, why do we see this fudge? Likely it's because their treasury, Yellen, is down to $20 billion. And now they're begging Congress for money just to be able to run the government's debts, just to be able to pay the government's bills, let alone the several trillion, 17 trillion, that she expects to backstop all of these insolvent banks' deposits with. So we are supposed to believe, again, this data is worse than the Soviet data. There was a good one that I put up before on the Soviet Union and how they held their economic data, how they did their economic data practices. This is worse than that. So we are supposed to believe on a seasonally adjusted basis that small banks got some fresh deposits and immediately lent them out to, drum roll please, real estate loans. Fucking geniuses. So C&I loans are up 3 billion, consumer loans up 0.7 billion, other loans dropped 2.5 billion, and drum roll, real estate loans. And again, why would Yellen be doing this? Because the commercial real estate sector is imploding. And the only way that they can keep papering over this charade is by rolling over those debts that are coming to maturity. And of course, the Fed and Treasury know that. But with rising rates, likely it's tough for those people to refinance at all without the shenanigans of the Fed and Treasury. So that's why you're seeing it go there. While large bank loans unchanged, yes, again, they're not under the similar pressure and they're not necessarily part of it. Oh, look, here's some of these geniuses that imploded these banks at the beginning. Wonderful thing. Oh, there was also one of them that was stupid enough to be in the car. Talking about, what was it? Being well educated while imploding the fucking banks doing the dipshit trading. While large bank loans unchanged on a seasonally adjusted basis, but down $4 billion on a non-seasonally adjusted basis. Again, these numbers are fudged. And then what we're getting at here, Zero Hedge and I, is why are they fudging? Well, commercial real estate is imploding. That is the worst part of their books. The commercial real estate loans are the worst part of these clowns' books. You know, the dipshit trade with the toiletries, that was enough. But they went even further than that, and then took up a bunch of asset-backed securities, mostly in commercial real estate. And those things are absolutely worthless. And the only way that they can even try to keep on with the charade, the paper over their failure, is by rolling over those debts and refinancing it. And like I said, that's the Fed and Treasury. And Yellen's out of money to do it. They're down at $20 billion, and they still have to pay the debts of the failure of this third world dump. And again, the fools likely think anything changed for them as they get poorer with the money printing. Not to mention the commercial real estate failure of the sovereign debt of the United States, and in turn the failure of their banks. And again, you see it's complete shenanigans. On a seasonally adjusted basis, they have their bullshit computations, their calculations, but down $4 billion on a non-seasonally adjusted basis. So on an unadjusted basis overall, loans and leases increased $2.3 billion. To try to paper over let's take a look again. How much is the commercial real estate market? Again, let's take a look at this. I guess I'm not going to find that notion. See if we can find it there. I'm going to tell you right now, it's not 20 fucking billion. It's not that tiny little amount. Here it is. Okay, that includes residential, but you get the fucking idea. But here's the ones for commercial. $36 billion worth of originations were issued in the United States. So, it'll be a good chunk of the 12. I mean, these are like 20-year mortgages or more, 30 years, 90 years, whatever. But yeah, 8.9 trillion including residential. But the point being, trying to paper over a little net increase of $2.3 billion is not going to do a damn thing for that failure. That commercial real estate market is still going to implode, especially in rising interest rates, where the only thing that they can hope for is to refinance their worthless properties at higher interest rates. That generally doesn't work out well, or work at all. Finally, as we noted yesterday, this is far from over as former Dallas Fed head Robert Kaplan dropped some uncomfortable truth bombs on the U.S. banking system. Phase 1 was an asset-liability mismatch at several banks. Phase 2 began with the stock market deciding to do its own supervisory scrubbing. We are now heading into the third phase. Bank leadership at small and mid-sized banks are considering how to shrink their loan books in order to address the mark-to-market loss of capital. And again, their marks are bullshit too. Oh, let's mark it to the mature. Let's hold it to maturity and then mark it. Yeah, that's bullshit. That's an accounting. That's an accounting lie. So their insult, as well as to guard against potential deposit instability in the future. Again, these banks are insolvent. No fool would put their money into these banks. That's why you see these shenanigans with the seasonally adjusted and non-seasonally adjusted stuff. Yeah, $4 billion on a non-seasonally adjusted basis. Because they too will be affected, especially in the derivatives exposure. And this is the important part here, just like I was saying. While asset liability and bank leadership is aware that the economy is slowing, yeah, that's going to be another factor, then we are likely about to enter a challenging credit environment, because in environments like this, credit contracts. The price of credit goes up. So those interest rates, not just the one the Fed sets for the fucking overnight rate, but the interest rates on loans, especially for much longer terms, like these commercial real estate mortgages, are going to be very fucking high. So it's going to be very difficult for them to try to get another mortgage or roll over their mortgage or refinance their mortgages on their worthless real estate property. While asset liability mismatches are relatively easy to spot, assessing the quality of loan portfolios is much more complicated. Don't forget where these buildings are, by the way. These are now in ghost towns like even fucking Midtown Manhattan, where nobody's showing up to work anymore, and you have essentially the animals running around being animals. CEOs of, and these again are like 100-year-old buildings too that aren't exactly the nicest things on earth. CEOs of many small and mid-sized banks are in a tough position. They can't easily raise equity because their stock prices are down. As a result, they are turning to shrinking their loan books. It's just a nice little implosion that feeds off itself. Finding places to pull back on existing loans and future loan commitments. This is making it much harder for small and mid-sized businesses to get and keep their bank loans. Yeah, let's read this again. They are shrinking their loan books, again, because they're insolvent. They don't have any money to loan. Finding places to pull back on existing loans and future loan commitments. And if they expand loaning to, say, example, horrible loans like commercial real estate that only get worse by the day, that makes their banks even more insolvent. And the only way they'd be doing that stuff that you read over here is if the Fed and Treasury put them up to it. Why would they be loaning that stuff? Well, because the Fed and Treasury knows the commercial real estate failure is going to implode the banking system. That's why. And don't forget, Yellen's down to $20 billion, and she can't even pay the government's bills before paying 17 trillion, 3/4 of U.S. GDP in deposits that she's trying to backstop, which she has to beg Congress for, by the way. I'm going to tell you this right now. It's not going to happen. You're not going to subsidize these dipshits for pulling the biggest dipshit trade on earth in history, probably. This is making it much harder for small and mid-sized businesses to get and keep their bank loans. So again, there's your millions of people being laid off too, by the way, or losing their jobs, because it's not necessarily a layoff when the company goes under. You just don't have a job anymore. It is a quiet phase that won't make headlines. Oh, it's definitely going to make headlines. It definitely is right now too. Let's check those layoff headlines. Let's take a look here. Oh, nice, J.P. Morgan. Even the massive bank like that, what was it? The Economic Bureau, National Bureau of Economic Research, NBER paper was. Oh, the big banks are awesome. They have so much profitability. Well, there's 500 jobs gone from them. And I bet you they aren't the bank tellers either. Oh, meta layoffs. Let's see here. Let's see. These were in the hundreds of thousands here. Look at this. More than 146,000 workers at U.S.-based tech companies have been laid off so far. I've seen a much higher number than that, 200-something thousand. J.P. Morgan cuts 1,000 First Republic employees in a failed bank, which again is more than Lehman, more than 2008 combined already. But is nevertheless relentlessly going on beneath the surface. Read the full interview here. No, there were plenty more layoffs, too. That was just the tech sector. Yeah, Facebook, 10,000 people lose their jobs. Look at this. Walgreens, 10% of corporate workforce. Well, that's a lot of people. It's a huge company. Disney begins round of layoffs. Millions of people will be losing their jobs. And wait, where are those laughing morons again? Who think they're smart because they're complete and utter imbeciles and ignoramuses? Where'd they go? I bet you they're gonna lose their fucking jobs too. I just want to see where they were. Free to speak is mine. And this is the problem with people who are fucking illiterate too. They're too stupid to reason, let alone read. And I bet you, it's kind of like how you got them to take the vaccines, right? The vaccines are safe and effective. But why? I see somebody dropping dead as they just got their vaccine. No, it says it's safe and effective. The government said it, so it has to be true. Oh, look, the government said there are more deposits now. Oh, it must be true. Yeah. Soviet data. So, free to speak is mine. Kaplan concludes rather ominously the recent banking turmoil. More than marching morons, too. Has highlighted the disparity between too big to fail banks and smaller and mid-sized banks. I worry that increasing the Fed funds rate from here may create further strains on the deposit base for those smaller banks. Well, they're already insolvent. I'm concerned that as the Fed raises rates, it is tightening the vice on small and mid-sized banks and the small and mid-sized businesses that rely on those banks for funding. And again, at this point, it does not matter whether the Fed raises rates or not, especially 25 basis points. When credit contracts, guess what? The price of those mortgages skyrocket. And those banks that are insolvent aren't really in any position to be making any loans. Nor is the Treasury or the Fed there to be backstopping anything because the Treasury is down to $20 billion, which doesn't even pay for a day's worth of expenditures of the U.S. government. You get to see it's really bad when people like this show up instead of those idiots cackling like morons because they thought they were smart. But don't forget why you're in this mess, aside from that. You didn't pay your tithe. 10% to the big guy. Don't forget to make your donations too. Oh, and again, stupid Bolshevism like in the Soviet Union. You know, like screwing people out of billions of dollars. That's why you get this, you can't see me pointing to the screen there, never mind. That's why you get BS Bolshevik type data like this. That's why. Millions of them will be losing their jobs though, so at least they won't be able to be idiots on that internet. They won't be able to afford it.